we are a private equity fund with the primary focus on the $5 to $15 million growth funding stage. And we invest primarily into healthcare and education. So I'll touch upon a couple of case studies, so to say, or the investments that I've seen in the market and my experience in India and the US, and maybe some of the investments that we have done on how we looked at those investments, what due diligence, what kind of due diligence was performed, what were the things we liked or disliked, or what are the key characteristics of an investment that an investor looks into there. But I would just like to focus on a couple of aspects that I think all of you should be focusing on, although Rod and Sandeep have covered the topics fairly well. So one thing that, to my mind, an entrepreneur really needs to look at is what Sandeep mentioned as how much to raise and when to raise money. How much is very, very important. And given the kind of turmoil we are seeing today in the world markets, and we might potentially see in the next decade or two, so that question becomes very important. And I think you need to segregate between your cash burn requirements, because any new business will need to fund itself for the day-to-day running and operations, as well as for the growth requirements. So you need to segregate those and plan your business well, understanding the market potential in India, because a lot of people sometimes overestimate the kind of potential that exists, especially in a given time frame. So like in the US, you can easily see a company with 20, 30 million size or funding amount. It can achieve a turnover of 100 million in 5 years. But is that possible in India? Maybe not in the next 2, 3 years. It's definitely possible over the next 5 to 10 years. And it also depends on the kind of sector or the space you're present in and what kind of niche you're targeting. But overestimation will also lead to you focusing on more, planning on more expenditures, and then thus needing more cash down the line. And moreover, the vibrance of the equity markets in India, that's also really needs some introspection, because it is very easy to get carried away with the stock market at this kind of a level and expectations of it going up and up.